Hello everybody, welcome back. Let's have a look at Matic then, shall we? But before we look at Matic, let's just focus on Bitcoin as well, because Bitcoin is going to be taking essentially the lead of the market. And even though Matic has been completely, in a way, completely resistant to any move that Bitcoin makes, it did pull back yesterday with the pullback that Bitcoin made. So we have to take into account what's going on with Bitcoin as well as Matic. So let's focus on that first. So if you're part of my Signals group or my Telegram chats, you know that I've been making shorts every time we come close to this descending trend, and the obvious short to take was this one here, or if you were late on that one, this one here. And basically every time it comes close to this descending trend, it's rejected. It's a relatively safe, not safe, but it's a pretty easy short to be taking. So we knew that there was going to be pullbacks when we got to this level, and we had those pullbacks. It did take a little longer than I expected, because the first time we hit it, we had a little baby wick, but the second time we came close to it, we got significant rejection, and that rejection impacted on Matic. So if we're going to look at what's been going on with Bitcoin, I do make videos on Bitcoin, so that's just something for you to watch if you're interested. But just very briefly, what I expect of Bitcoin is to be wavering around in this descending triangle that we've got here until the support or the resistance break. And given the fact that we have death cross and all moving averages are facing down, and we are still in negative territory on the daily with the MACD, and we have a itchy cloud conversion baseline cross on the weekly, which was where is that? Here, suggesting continuation of a move down from the price action, which was around here or even there. So yeah, I expect us to come back down into the 6,000s again. There's a variety of other reasons. I won't bore you because I know you're here to watch videos on Matic. So we are probably, most likely anyway, because anything's possible, but the more likely situation is that we will be bouncing around within here, up and down, chopping and changing, unlikely to break above these levels. Even if we were to break above them, it would just be a wick, it would be a candle body close, so maybe fake outs, hunting out people's short positions, but coming straight back down within them, and eventually coming back down to our bottom level here that we've tested of 6,500, and then probably breaking that after a few tests. And again, as the smaller the triangle gets, the more likely the move will be, and the bigger it will be, bringing us down into the 5,000s probably. Like I say, the most likely situation. That will impact Matic without question, because it has to. Nothing can move down. Let's just measure this, okay? So let's just say we were bottoming out around this area, we broke the support, and we came all the way down to our next level of support. That's 25% retrace again from that level. Bear in mind we have a death cross now, so that's completely plausible that would happen. That would happen with Matic too. Perhaps not 25% retracement, the way that Matic's going, but a retracement nonetheless. The important thing is, how does Matic cope with that kind of price action, given the fact that it's been so bullish over this period where Bitcoin has been so bearish. Anyway, let's get back into it, shall we? So Matic's basically done. How much have we done at this point? We won't count that. We'll just count this from top to bottom. We have done 104. Yeah, we'll call it 115%, and we have now retraced just today in this candle body to the price action we're at right now, 6%. That's okay. For people who are getting worried, 6% out of 114 is perfectly fine. We need to have pullbacks. We have to have pullbacks. People have to take profit on something that's gone up over 100%. It's perfectly normal. It's absolutely normal and natural and perfectly fine. What wouldn't be normal and natural is for it to not do that, and we have something like this, as we had at the very beginning of Matic's life, creating, basically a bearish pattern, a huge consolidation pattern, where it loses. It must have been around 80% of its value from the top to the bottom, or more maybe. So that's what we don't want to see. To see this is okay. This is what we kind of want to see. It's still pretty. It's borderline steroids. When we talk about health, there's healthy growth, and there's borderline steroid growth, and I have to say it does concern me that it goes up so fast, because it's not that I didn't want to see it go up above and break above this level so fast. I'd like to have seen a bit more maturity and accumulation within this area here, which is something that we might end up having. We might have that, and if we do have that, that's fine. That is perfectly fine for us to have that. But if we don't and we accumulate above this level, that's pretty healthy too, and that would be I'd probably say the better option for us to accumulate above 2.7 cent, which is the area that we were rejected from after the parabolic top. You could call it the top of the actual realistic price action that Matic had before this went bonkers. I mean, it was going bonkers before, but 2.7. Well, let's put it into context. When we go to the weekly, what we see is that we are now having a candle body higher than any of the candle bodies Matic's ever had in its lifespan. So, we are doing very well. That's good. That's a very bullish sign. We closed this candle today, because today is Sunday. We'll close this candle body at some point. Hopefully, we'll close it above 2.7 cent. But even if we don't, if we come down beneath the 2.7 cent and we close it above anywhere above this level here, which is 2.54, we don't need to do that, but if we do, it'll be the first time we've had a candle body close above that level ever in Matic's history. So extremely bullish, very good sign, pretty good. Let's not complain about that, and that's a very good thing. So let's talk about what's likely to happen from now on then, and what indicators we've got on this very small chart to make us feel better about where it's going to go. So we're having a 6% pullback. We could come back down even more. We are appearing to be supported on the 2.7 cent, which is good, because this is the level we were rejected from here. So for that to turn to support, would appear that line that I drew in, and I had this in a while ago now, if you watch my channel, this line here does hold some relevance. Clearly it's supposed to be relevant when it came to rejecting, but it looks like it's holding it for a support for the moment, which is fine, but if it does break down, it's no big deal either. Bear in mind, like I say, 115%, did I say, from top to bottom? If it comes down into this area, don't get scared, don't get worried, just think about it as accumulation time. It's more time to think about, consider buying more. And like I said, I'm not a financial advisor, so it's not financial advice, but that's what accumulation is. We pull back, we hover around, and we buy more, waiting for the next step up, provided it holds its value. It's accumulation. So if it holds its value within this level, which is still a big level, what's that about? I think I measured it yesterday, it's about 33% area. Yeah, 34% area. It's a big area to accumulate in. There's a lot of money to be made in there just from essentially scalping if it did go from top to bottom, which I don't think it will, but it could do. Like I say, if Bitcoin comes down 25%, we could be coming down maybe, in theory, we could be coming down to test the 2 cent level. It's not unlikely, but it's, the way things are going, the way things look at the moment, it's not likely either, but you have to bear these things in mind. Especially because Matic's making its history as it goes along. It's got really very little to go by. We've got some tangible supports at 2 cent, that's clear, because we were supported here after the parabolic move. We've got tangible resistance and perhaps maybe a support, and again, for the very first time in its entire life, it's been supported on here. So this would be a new thing, but it's not a new level. This level was a historical excuse me, a historical resistance level, so resistances do turn to supports, and it looks as though this might be happening. So we've got a few things to go by. What other things do we have to go by? So we'll just zoom in a little bit further, and again, we are on the daily chart. We can go to some smaller time frames in a moment, see if there's any more indicators, but because it's been so bullish, I expect all indicators to look bullish because it's gone up so fast, so quick. What we have here is on the daily, we have a cross now here above the cloud of a conversion line over the baseline, which is again a sign of continuation of a move on the daily. Now this is a very small chart, so itchy clouds they can be very misleading in especially moves like this, and especially with a chart so small. But it's an indicator nonetheless, so that I'm holding not weight on it, but it's just something to bear in mind. So that would suggest continuation of the move. We have a golden cross. We had the golden cross back here, by the way, though, so you could argue that maybe that golden cross is played out. We had the golden cross, all the same. All indicators are very steep, which is bullish, clearly, and they're all nicely spread. So we've got the 7, the 8, 10, the 21, and so on and so on, all the way down to the 200 EMA. We've actually got the 50 simple and the the 50 simple and the 200 EMA, which are these two here. And if we have that 50 cross the 200, again, that would be another golden cross on just simple moving averages, which doesn't hold as much weight as it would do on a exponential moving averages, but it's a golden cross nonetheless. But it's not a textbook one, but it still counts for something. These are the sort of things we want to see. We want to see essentially this purple going up here above this yellow. That would be bullish, and then finally we want to see this white across and above the yellow, and then we'd have the perfect rainbow spread of moving averages suggesting bullish moves on a daily chart as well, which is really good. That's the kind of thing you want to have. So it would suggest continuation. Again, when we go to the weekly, what do we see? And again, it's a very young chart. Look at the size of that. You could put that in your back pocket if you wanted to. It's very, very small. But what we do have is when we look at the Ichimoku cloud there, we also have a fresh cross on the weekly, which is pretty bullish as well. But again, what you could bear in mind is when you have a move like this, that some of these indicators, especially Ichimoku clouds, they're forced into creating these indications. So it's not as substantial as if this were to play out over a longer period of time. That would definitely be a more appropriate way to use this tool. It's not. Ichimoku cloud is a great indicator for the continued progression of a chart's move over a long period of time. And considering we've not had this chart on since what was it, April? That's when it came in. The Ichi cloud doesn't really, to me, hold much relevance, but I always use it anyway. It's like I say, it might be just by default it's just doing this. It's not really something to go by on its own. We look at other indicators. What do we see? Excuse me. We see a very, 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 very bullish looking MACD. We do see a declining volume, but that's not a great deal to worry about, because the volume is still very high. And again, during accumulation times, what you do see lower volume. So long as the price action holds at a certain level and we don't fully retrace, then expect to see lower volume. Volume isn't everything. Volume is sometimes it's quite oftentimes I hear people talking about volume as in it's the be all and end all. It's not. You can trade using volume for short periods of time, but longer periods of time, which is what we really want to go by, is we would expect to see this. This is what we would expect to see. What we don't want to see is us to dribble down to next to nothing. We want to see continuation of this move. We want to see us push into the 3 cent area, over the next week or so, definitely. But Matic's made these moves faster than I expected. I didn't know. Obviously, it's all speculation, but judging by the chart and the way I've been looking at it over the last few weeks before these big moves, I anticipated that in December we would have a 2 cent Matic in December. So December the 1st now, we do have a 2 cent Matic, so that's good. So that appeared to be accurate in that way. And the reason I said that, basically, you don't need to go back and watch my videos, but the reason I expected that is because we have been consolidating for long enough. We actually bottomed out here and we've not come down to retest that. This was a messy move driven by the Coinbase announcement. We were in a descending trend, just as you saw with Bitcoin. Bitcoin's got its own that it's still stuck under now. This is what happens when something breaks out of a descending trend. We burst out of it and we stayed above it, and then the most important thing to hold on to this chart was, and again, it's such a young chart, there's very little to go by when you look at these charts that are very, very young, but Matic showed me that it stayed above the green 50 EMA, and by doing that it was making the green 50 EMA ever so slightly steeper and steeper and steeper, and because the chart was so young, we didn't even have a 200 EMA on it. As soon as that popped in, we saw how bullish it was looking, because the gap was getting filled slower and slower and slower between the two. And on Satoshi values, it was a lot healthier, and we got a golden cross on the Satoshi value before we got these big moves here. And then basically the rest is history. You know, it was like a domino effect of bullish cross after bullish indication, and yeah, just snowballed, which is what's happened here. Anyway, like I say, we've got indications showed with the with everything that I've told you, and a lot of these indicators will not be misleading, but will be telling us that it's bullish by nature because it's bullish. And there's not going to be a great deal to go by to tell us that the move is over quite yet, until essentially we start to pull back from certain areas. I wanted to see more of a rejection on this level here of the 2.7, and if we come back beneath it and find ourselves being rejected from it, it's not the end of the world either. And again, accumulation in this zone here would be perfectly fine and actually very healthy, so don't be afraid of that if that happens. But accumulation above here would be extremely healthy. That would be like your raw vegan diet kind of health up here, and down here would just be, you know, perfectly, you know, your average Joe Blogs kind of health. You know, bit of cardio at the weekend, you know, eating your 5 a day. That's what you'll be doing in this area. So both of these areas will be very healthy. We don't want to just see a big green candle after big green candle after big green candle. We have to have pullbacks. We have to allow new money to come back in, and people to take profits and buy back. So that's perfectly normal. The next levels then, where we're going to be going for the next level. So clearly, if we look at where we came from back here, the last green body that we had was at this level here, and that is just under 3 cents. It's and in fact, I think we've touched that area already, haven't we? Yeah, we have been rejected on exactly that level, so that is no surprise at all. So there is an element of history. Get rid of all this. What am I doing, man? Oh my god! I've just recovered from a serious bout of man flu, and it appears it's still affecting my brain. So there we go. So that's where the last candle body was, and you can see how that is where our last candle body was as well. So there are certain patterns that you can follow with Matic. Clearly, that's not a straight arrow, of course it's not. So just below 3 cents, you can see our candle body closed on 2 occasions here. That was the highest that we had on a daily chart, candle body close. Obviously not a weekly, but on a daily, and we were rejected from there perfectly. So that's why, most likely, we were rejected from that level. So you can see that the technical analysis does hold relevance with Matic, despite its young, the fact that it's a young chart. You can understand why it's not a big deal for it to pull back into these areas, even if it was to come down to the 2 cent level. That's not a big deal either. But in all fairness, you know, accumulation in this zone here is fine. Accumulation in this zone here is fine. The be all and end all is to break above the level that we've just stretched out there, which we can just call it 3 cent, you know, to be safe, give or take. We'll call it 3 cent on the dot. If we break above 3 cent, we are then going to be making new history. I know that we've been there before in these wicks, but these wicks were FOMO wicks. They don't generally count for a great deal. They count for something, but you know, they don't count for much. To me, anyway. Yes, we can say that we peaked at our all-time high when we break above there, and that was something we could all give ourselves a high five about. But again, it's this was FOMO, clearly. I remember this at the time because the volume pouring into it was massive, absolutely massive. I remember that's just huge. Look at that. I mean, it was unbelievable. It's 7.1 billion. So we're not needing that kind of volume now to do that. That's not necessary. And again, Matic's available for margin trading as well, which is going to help it make big moves. So yeah, 3 cent break above there we can then call it new territory, and then we will find where our resistances may lie. Now, as we were rejected here on this, oh my god, I will come back to life one day and start drawing lines in better than I have done today. Could expect to be rejected at that level there, 3.5 cent, because that's where that guy was rejected from there. So I expect to see a rejection from there, perhaps. But then anything above there was just crazy. You know, we could just go launching to skyrocketing limits. We could go past our all-time high. You could go to 5, 6, 7, 9, 10 cent. You know, even higher. Who knows? At that point, we just don't really know. And I said that on my last video. At that point, we kind of don't really know what it's doing. You could go by a Fibonacci level. Someone was telling me, but even that, I think on a situation like Matic, we want to see how it reacts when it pulls back before we can then start to really talk about where it's going to go in the long term from there. Now, you know, if you watch this channel, you know that I've got high hopes for Matic. You know, I've always had high hopes for it, which is why I focus on it so much. And you know, I do expect it. I mean, what value are we at now? So we're at 2.7 cent. You know, in the long term, I would expect a $1. A $1 Matic would not be out of the realms of possibility. I think that's very a modest amount. And to me, it's all to do with timing as well. You know, if Bitcoin completes its 4-year cycle in December 2021, that would be pretty much time to be cautious about any coin. It doesn't matter how bullish it is. Some coins might be able to carry on after that, but if Matic, I mean, if Bitcoin decides to call it a day and, you know, commit suicide basically, like it generally does at the end of the 3rd year, before it goes into its bear trend, its consolidation, then yeah, I would imagine Matic would do the same and react the same. So yeah, I mean, it's all about timing. So I could say to you now that yeah, $1 Matic is very achievable within 2 years, because we are talking just over 2 years from now, when that Bitcoin cycle will have kind of begun to finish towards the end of December. I think 2021 is when it's predicted to be sort of getting finished by. So yeah, you've got to bear all that in mind. $1, not a problem, but there's enough sort of, I mean, the way that Matic moves, and if it continues to move in a healthy fashion, there's no reason why it couldn't go to $2, $3, $4, or even higher. But I'm not one of those people that likes to make big, giant, you know, unrealistic claims on coins. That's not me. I like to be pleasantly surprised, and I would be pleasantly surprised if it breaks the $1 area, which I do expect it to do, in all fairness. But I wouldn't be unhappy if it didn't, because I've been buying this, you know, at around about the 1 cent level for several months. So that's essentially a 100x. So I'm not obviously going to say no to that, am I? Anyway, I hope you found this one useful, and if you have any further ideas about what Matic's going to do realistically, and not just bold claims at where you think it's going to go, feel free to write those down in the comments below, because I like to know how people think. But if there's anything that you think I've missed, or anything you want me to look at regarding Matic, or any questions you've got, send me a comment below, or even better, join my Telegram chat, which is mostly about Matic. Anyway, I'll leave it with you there. I hope you have a nice rest of the weekend, and yeah, it's December now, so Merry Christmas.